Technology Private Limited has a successful track record in the field of academia, research, training, recruitment, and job assistance. Since its inception in 2018, we also offer training and internship for all levels of the professional world. It starts from plus two level to a seasoned professional. We in Stupidity Technology emphasize academia and research development, as no civilization can survive without education and can't progress without research. So we work with each applicant to prepare them for employment ready. Stuvely technology bridges the gap between employer and employee via industry, product specific selection, and pre-employment training. So just for a quick look, I'm just sharing my screen and I'll show you all the unique services which Stuvely family holds. Okay. So this is our website, which is stuvely.com. Okay. So we have learning and teaching platform, which is prive.com. And we have like internship training program, which is studentearn.com. And we have professional resume builder, which is resumemission.com. For job, like searching your job nearby your location, we have nagrojan.com. For education, we have Vidyapan, like searching universities, schools, colleges nearby your location. We have psychometric test, which is sudaksha.com. And for research, we have anushram.com. So these are the unique services which True Valley family holds. So Iron ma'am, please take over from here. I'll just stop sharing my screen. Yeah.
Thank you, Sita, for the warm welcome here. Good morning, everyone. I hope everyone is excited. Yes, no, I want everyone to switch on their camera because it's going to be an interactive session. Otherwise, you all will be just at your place doing your things and there would be no focus. And I would be asking you all questions. So I request that everyone should be on the camera. Yes. All right. So I am Irene Lobo and I am working with Wells Fargo. It's one of the top investment bank in Bangalore. And I'm basically into investment banking and into structured finance. So it's been around 5 years working into investment banking and 10 plus years into teaching and training. So before we start with the class today, I want to understand how many people know what is the topic for today. Yes, you can unmute and you can talk. That would be better. Is everyone with me? You can unmute and talk. What is the topic for today? Anyone? There's no right and wrong answer. You can just give a try.
Unlock your financial potential by exploring the world of capital share market.
Very good. Thank you, Harry. Thank you. Good attempt. Yes. So before we go to the financial markets and all of those jargons, financial products, capital market and all, let's understand the basic. What is finance? What is finance to you? Thank you, Sahil. What is finance? Yes. Can anyone answer that question? Yes, no. What is finance? No one knows what is finance. Yes, no. No one is able to answer that question. And then capital market, all of that you'll want to know. What is finance? Can anyone answer that question? No. So,
It's
okay.
basically related
Yes.
to like the process of raising funds or capital for like any kind of expenditure or something related to money.
Okay. Very good. Yes, that is a part of finance. So finance is basically management. Okay, someone is actually soft on Google and has pasted it. Thank you, Subhadi, for taking that effort. So finance is basically management of your money. So it's not necessary that you are, you actually have to get into capital market and then buy a share and then manage it. No, we as students or parents or trainers or as individuals, we manage our daily finances, right? And the best example is our mother. She manages finance. If one day you all are partying around with the whole salary, will you be able to eat the next day? Yes, no? No, right? So you are managing finance from your home only. It's from your household. It starts from your household. You don't have to actually go into capital market and BSc, NSC, World Bank, all of that. No, it starts with you. So your parents give you pocket money, right? Every month. So you all get your salary, you get your pocket money. Do you spend it on the first of every month? No, right? You manage it so that you can use it for the entire month. You either bifurcate the money if it is around 2,000 or 5,000 rupees, right? Oh, okay. So if it is 2,000 or 5,000 rupees, you will manage it spending around 500 per week or 200 per week, and then you'll save the rest of the money, right? Why? Because if you've got some event, if you've got a party around, you can spend it on your clothing, you can spend it on your eating, you can spend it on people around or gifting someone, right? You are not going to go back to your parents. They won't give you pocket money again once it's over, right? Correct? I want everyone to unmute
Yes, ma'am, definitely, it's correct.
Yes, thank you. I want everyone to unmute yourself and talk. Okay, it's going to be an interactive session. Okay, all right. So, let's start with what is a financial market. Can anyone tell me that? What is a financial market? Any try? I want someone to try. Okay, I will be doing cold calling. Madhav Gupta, can you please tell me what is a financial market? Madhav Gupta. Okay, Subhadeep is answering. Very nice. So Subhadeep, you said that a market this time no Google. So financial market is a place where you can buy or sell asset. Okay, can you tell me what is an asset now? Let's do a little deep dive. Okay, let's not answer like that. Let's do a deep dive. Can you can you unmute yourself, Subhadeep? Yes, and can you come on the camera? So what is an asset? What is an asset to you? What is your asset? Okay, you are trading. Oh, multitasking. All right. Okay. So basically, Subhadeep has spoken about assets. For you as students, asset would be whatever you own. Okay. So whatever you own is an asset. Okay. But in the financial markets, there are financial products and there are multiple financial products that are shares, bonds, okay, equity, preference, derivatives, commodity market, money market instruments. There are a lot of things based on the duration of the asset. Okay. So these are called assets. When you have it in your demat account, when you own it, it's your asset. Okay. No one can take it away from you. So only equity shares, they are transferable. Let's say you can transfer those shares to any of your family member or friends. You can gift them via platform norms. Okay. But the others cannot be transferred. They are either you buy it or either you sell it or you hold it. There's nothing that can be transferable there. Okay. So these are financial markets. Let's do a little deep dive into that. I would be sharing my screen. Let me know if it is visible to you all. Okay. Here. Okay, is my screen visible? Can anyone, just respond? All right. So let's talk about the types of financial markets that we come across. So it's a place where securities like stocks and bonds, commodities like valuable metals are exchanged at efficient market prices. Okay. Can anyone tell me what is meant by efficient market prices? Yes. So it's based on basically demand and supply, right? If there is demand, the prices would be high, right? Okay. So let's go to this part. Efficient market prices means the unbiased price that reflects belief at the collective speculation of all investors about future prospect. Okay. So it's basically on the demand and supply. The trading of stocks and bonds in financial market can take directly between the buyers and sellers or by medium of stock exchange. Okay. So here we got NSE and BSE, okay, and there are Sensex and index and Nifty index where people use that platform for the purpose of training. So Pradeep would be one of the best example who could tell us about it after he's done with his trade, okay? He'll be a live example for us. Okay, so financial market can be domestic or international, as I already said. So BSE is a domestic one, NSE we've got, and then we've got even on the international platform, we've got New York Stock Exchange, we've got London Stock Exchange, those are at an international level. Okay, NASDAQ, they are all indexes and platforms where you can trade. So you might have heard about foreign exchange that that takes place, foreign exchange currency that people trade in, derivatives that people trade in, that is all on the international level as well. Okay, so financial market, it's divided into multiple markets. Now it's bifurcated deep down. So capital market, commodity market, money market, derivatives market, insurance market, and financial exchange market. Here in capital market, we basically deal with equity. Okay, it's a market of equity and debt. Okay, so before we go to the deep diving into market, can someone tell me what are the instruments that are there in the capital market? What are the instruments that are there in the capital market?
Stocks and bonds.
Okay, stocks and bonds. Okay. Can you tell me a little more about it? Which is cheaper? We've got stocks and bonds and what else? Which is cheaper? Is equity stocks is cheaper or bonds? Which market would you like to trade in when you want to raise some capital? Which market would you like to trade in? Equity market or a debt market? Yes, Om, you were the one who answered it, right?
Ma'am, what do you mean by raising capital?
So let's say now, can you tell me, are you a student or are you a working professional?
I'm a student.
Okay, you're a student. Okay. Now let's say, Om, you've got an idea. You want to make some automotive machine or something at home. Okay, and you want to get into a market. And you've just saved around 50,000 rupees, but I think the project would require 1 lakh. Okay, now where are you going to get the rest of the 50,000 rupees? Will your parents give you the whole amount? They've already given you 50,000. Will they give you more 50,000? What are the ways that you will raise capital? What are the ways that you will get money to execute that automotive machine that you made?
Yeah, I can raise capital
Your
market.
voice is breaking. There's a technical glitch, I think, from your end. A little louder,
Yes, ma'am. I
or you can
can
type
raise
in.
capital in the capital market.
You can, no, okay, you cannot raise capital in the capital market. Okay, so I'll tell you what you would be doing is when you as a student is starting some execution of some automotive machine, what you will do is 50,000 your parents have already given you. Okay, now you've got to raise 50,000 more. Raising money means you are asking for money. Okay, it's like a loan for you that you need to repay. Okay, so basically what you will do is you will ask some of your friends for money. Okay, so let's say now your friends have contributed 1,000, 2,000, and you've got around 20,000 more. Now you're left with 30,000 that needs to be raised. Okay, so what you will do is raising of 30,000, you will either keep that 30,000 on hold and try to work with 70,000 that you've already raised, or else what you will do is you kind of take a debt. Debt is basically a loan from a bank of 30,000. Okay, so what is the benefit of raising funds via equity shares is basically whenever there's a huge profit, you are the last person to get the money because you are the owner. Equity shares, that means they are the owners of the company. Okay, so basically whenever there's a huge profit, you get the profit after reaping everything. Okay, where there are norms that are written on the, when there are certificates made, demat certificates made, there are certain norms that are written and there are certain criteria for different people that needs to be paid. Okay. So equity owners get the last. So whenever there's a high profit, you will be the last one to get higher profits. Okay. But then if you are a person who has taken a debt, that is an expensive mode of raising capital. You will have to pay the interest. Okay. And if you're paying it in installments, you will have to pay an extra amount of fees that is charged. Okay. The management fees, the fees that are charged by the bank. Okay. So it is said that equity is the best market, and the equity is one of the riskiest market to raise capital. And it has a leverage of actually having high profits and high earnings. But from debt market, you do not make much money. Okay. That's basically you're taking a loan. Got it? Got it?
Yes, ma'am.
Yes. Okay. If you've got any questions, please ask. Okay. Please ask. So next we'll go to the commodity markets. Commodity markets are basically where let's say a farmer and a mediator, they are having a trade talking about, let's say, the onion prices. So if the farmer says the onion prices are going to fall now, so let's say the farmer is saying that he will have an agreement with me. I'm a middleman, or I'm a wholesaler, or a middle agent. Okay. Farmer does not have exposure to everyone at large, right? So I would be a middleman or a middle agent. I would have a trade with him or an agreement with him saying that you think that the onion prices are going to fall from 100 to 50. So but I have predicted that the onion prices are going to rise. So I will tell him, okay, you can sell me these onions for around 75 rupees. Let's block the price. So what am I doing? I'm making an agreement with him to block the pricing of the onion prices of 1 kg onion, okay, for 75. Now what happens is, let's say the market is going up and the prices of the onion goes to 150. Okay. What is the difference between 100 and 150? What is the difference between 100 and 150? It's 50, right? Yes. So the middleman will make a profit of 50 there, but the farmer is going to make a loss. Why? Because he already priced and he made an agreement to sell the onions at 75 rupees, no matter if the prices in the market have increased to 150. He made a loss. Now, vice versa case, if the farmer predicts that it is 75 and the middleman is predicting that the prices are not going to fall, but let's say the prices fall to around 25 rupees. Now the middleman has made a loss. So the commodity market is basically a market where all the commodities are traded based on the prices. Okay. We'll have a deep dive a little later. What kind of products are there in this market? Okay. There are onions, there are potatoes, there are many other things that are also traded. There are precious metals. Okay. So if you see, there are gold prices that keeps fluctuating. Okay. You might be seeing people are trading even in gold. There are sovereign bonds also. So that all comes in a commodity market. Now let's go to the money market. So money market instruments are basically short-term instruments. Okay, let's say there are businessmen who require immediate amount of money. They require money even for a day. Let's say they have to transfer some huge amount of if they are trading in some product market, they are trading into some wooden furniture. So they need money on a daily basis. So what they would do is they would basically take some amount from the money market. There are treasury bills, there are commercial papers. Okay, so there are many other money market instruments where they trade in. This is for a short period, so it would basically be for a day or two until 6 months. So money market instruments have a duration up to 1 year. Okay, up to 1 year. And capital market instruments, they have a duration, I mean, they do not have a targeted duration. Okay, it is based on the performance of the company. Same goes with commodity markets. Okay, let's go to the derivative markets. So derivative market has basically very risky products. Okay, and if you know there are different kinds of products that are on the exchange, that are on the stock exchange, and there are different products that are actually dealt over the counter. Okay, they are called as OTC market instruments. Okay, so over the counter is basically, let's say you and me, I am not keeping any middleman there. Okay, so basically I will just have an agreement with you. There's no middleman there, that see, if these prices are so much, so let's decide this so that I make a profit. Okay, but on the exchange there is a call and put option, and the exchange is a mediator there. So if a person is trying to it basically acts as a very good platform where there's a regulator involved there. Okay, because under the OTC market, where just you and me, you may run away. Okay, so I don't have any evidence, I don't have anything legal that I can come and get my money back. But on the exchange, we've got future and options. It's a regulated market. You need to keep paying premiums to stay in the derivative market. Got it? Am I clear with the 4 markets that we've done? Or am I going a little faster? Shivani, can you tell me? Shivani Mishra? Shivani Mishra, are you there?
Yes, ma'am.
Yes. Okay. Can you tell me what have we spoken about now? I mean, what have we spoken about till now? What are the different types of markets that I've spoken about and the products that you've heard? Tell me one product that you've understood, or is it no one has understood anything? Yes, no? Okay, Sejal Gupta.
Yes, ma'am.
Yes. What is one financial product that I've spoken about that you have understood?
You have told about the 4 types of financial market: the capital market, commodity market, and money market and derivative markets.
Okay.
And
So,
in capital markets, you have included about equity markets and debt markets. In money market, you have explained about the short-term borrowings and lending. And in commodity markets, you have told about the physical commodity markets and also about the price movements.
Very good. Derivative market, anything?
Derivative markets, you have told about the contracts of buying, selling of the assets, and about
Yes.
the predetermined future dates and prices.
Yes, yes. Very good, Sejal. Very good. Thank you for answering.
Thank you.
Okay. Yes. So now let's go to the insurance market. Does anyone know what are insurance markets and what are the products and how does that work? Anyone? Have you all purchased insurances? Have you heard your parents buying insurance? Yes, no? Let me pick someone now. Sahil. Yes, Sahil. Can you tell us?
Yes, ma'am. I'm not sure exactly. I've never purchased insurance, but as much as I am aware, it is basically a risk, like it is for reducing risk that we buy an insurance for a certain cause. And let's say if that happens and if we have any expenses, then the company pays us to give for that, something like that.
Okay, can you give me an example, like what kind of insurance have you heard about or your parents might have taken?
So we have car insurance that if let's say anything happens, if any damage is happening to the car, so we like the expenses which goes on the repairment, it can be reimbursed.
Very good. So you get the amount like that only, your reimbursement, you get the entire amount, or you need to pay something?
We have to pay a premium on it on a
Correct.
monthly basis.
Very good, very good, Sahil. Yes. Very good. So, yes. So Sahil is correct. So insurance markets are basically the markets where they prevent you from risk, major risk that you may undergo or from some danger. So it's basically a market where they give you an element of safeguarding you and your your family and your assets. Okay, so there is something called as life insurance, term insurance, health insurance, car insurance, vehicle insurance. Okay, and if you go to the international market, they have lot of insurances. I mean, it's next level. So they've got insurances for their TV, this, that. So basic level insurance they have got, and they are totally insured. So that is something called that is something that we've read about insurance markets. So here you do not get the money immediately. They actually assess the damage that has happened to you, to your vehicle, or your health, and they do not do they pay you 100% of the premium that you've paid altogether, Sahil, that you explained, they pay premium. So let's say there's a car that has got brutally damaged and it is costing you around 1 lakh, the damage. Okay, fixing the damage. Is the insurance company going to pay you full 1 lakh rupees, the entire amount?
No, ma'am. I think it depends. They are gonna have to check, and if it is covered under the policy, then they might
Okay.
pay, or else yes.
Yes, very good. So basically, they wouldn't be able to pay you the entire 1 lakh. They're going to assess, they're going to scrutinize your damage, okay? And they would pay you around 95 to 98%, max to max. They pay you 90% of the amount that you've had a loss, okay? All right. So there is even travel insurance, there's transportation insurance when goods are being moved from one place to another. Let's say if a set of goods is burnt in fire, how are you going to gain that loss that you face? So insurance helps here. Okay, in terms of family also, in terms of life also, people make their life insured so that the family can enjoy the benefits after their loss. Okay, now let's go to the foreign exchange market. Can anyone tell me what are the products that are dealt in the foreign exchange market? It's fine even if it is right, wrong. There's no right and wrong here. We are just learning. Okay. Quickly. Arzu, can you tell us? Arzu Kambuj. Foreign exchange market. What do we deal in the foreign exchange market? What are the products that you've heard about? Okay, Shubhadeep. Shubhadeep, can you tell us what is foreign exchange market deals in? Or Nishta?
Yes, ma'am.
Yes,
Am I,
Shubhadeep.
am I audible?
Yes, you are.
Oh, basically the foreign exchange market is about the currency exchange where we can trade in pair of currencies and some other asset class like crypto and bond in US or other countries, surrendering the privilege of this and get into the matter. And we can also invest in ETF also, that is part of foreign exchange where
Hmm.
that's all as far I know.
Okay, so basically foreign exchange market is basically a currency market where you can trade in different currencies, okay, based on the price fluctuation. So let's say we've got USD, it's on a rising level. Okay, the price of the USD dollar is rising. So $1 would be around 200 rupees in Indian INR. So I would kind of trade in that with so in INR with USD, I can trade in that based on the fluctuations in order to understand the benefit that I would be getting. Okay, so let's say if I am taking USD dollar, which has the value of 200 or 500 example. Okay, it's not reached 500 yet, but I'm just giving an example. So if I want to sell that USD dollar, I can go to a market where the valuation of that particular country's currency is way more than the USD. Okay, so let's say the 500 USD dollar is in some other country. I'm giving you an example. Let's go to Tanzania, or let's go to Malaysia or Singapore. There, the USD dollar has much more value. So that $500 could fetch me around 50,000 or 20,000, units, 20,000 currency in Singapore country. Okay. So basically, the valuation that is happening between two countries is basically going to fetch me a profit. There could be even losses. Okay, But whatever the buying and selling that I'm doing in different markets at an international level, that's called an arbitrage pricing that happens. Okay, that's called an arbitrage. That fetches me a huge amount of profit. Okay, but you need to continuously keep monitoring for the currencies that keeps fluctuating on the platform. That could be Nasdaq, that could be NYSE, that could be a London Stock Exchange, that could be many other exchanges based on the country that you are preferring. And the country's currency basically focuses on the performance that is happening in the country. So let's say now India is in a progressive mode. Okay, but if you see Africa, will you think of investing anything in Africa? Can anyone answer that? Will you think of investing anything in Africa? Will you want to buy a land in Africa, Rutuja? Can you tell me that? Do you want to buy a land in Africa? Or Prashant? Yes, no? Do you want to buy a land in Africa? Anyone? Sejal?
Ma'am, no
Shivani?
idea.
No idea. Shivani, do you want to buy a land in Africa? Subhadeep,
Yes, ma'am, obviously.
you want to buy a land in Africa. Why?
Because there is a uptrend opportunity in the whole market side area, because the US market and the China as well as the other forex market is also saturated. But you can find a new opportunity in a market like a country or market like Africa or Vietnam, which is raising global GDP is overwhelming, and they are touched with India. And the last G20 summit is going to interesting by the fact. So this is
Okay.
quite interesting factor. And
Okay.
Adani will
Okay.
also invest in their
Okay.
model.
So this you are able to invest based on the report that you've read. Okay. But if you see 5 years back, if you see the currency of Africa is way more devalued than the currency that we are using. Okay. So
Yeah,
let's
yeah.
say if you're taking, yes. So yes, if you talk about based on opportunity, yes, you can invest in Africa. But currently, if you see the markets, you will see the performance, how it is performing in in Africa. If there's no scope, now that you've spoken that there are some upcoming projects in Africa, then you will invest. But if there's nothing, will you be investing in Africa?
No, ma'am, of course not, because we are
Correct.
trying to
Correct.
invest in the emerging market right now.
Exactly. So
But
based on the
we can
new,
invest in new opportunities.
yes, so if you're going to see, you're going to actually analyze the investing opportunities and the growth opportunities in that particular country, and then you would be investing. Okay. All right, let's go to the next slide. Okay, so let's talk about the money market. Okay, so money market is a center for dealing mainly for short term, as I had already spoken about. It meets short term requirements of the borrowers and provides liquidity. Liquidity is basically quick cash. Okay, quick cash. So what are the simple basic question to everyone? What is one asset that you have at home that will fetch you quick cash or that would fetch you liquidity? What is one asset that you might have at home? Can someone tell me that?
I
Yes.
think gold. Gold.
Very good, Subhadeep. Very good. So I think only Subhadeep is listening to my session. Rest all of y'all are, just, I don't know, y'all are sleeping or y'all are awake or y'all are busy with some or the other things there. Okay, very good, Subhadeep. Yes, gold is one of the fastest asset that could be liquidated in the market. Okay. So money market becomes a component of financial markets for assets involved in short-term borrowing, lending, buying, and selling with original maturities of 1 year or less. So, can anyone tell me which kind of individuals would be using money market instruments? Will I be using money market instruments? Will you be using money market instruments? Or which category or set of people would be using these instruments? Yes.
The people who are trying to build a business,
The ones who are trying to
like
build a
startups
business.
in their early
Sorry, Om. I am not getting you.
Like if someone is doing his own startup, then he will need money.
Okay. So Om, so you are incorrect actually. So money market instruments are basically utilized by businessmen, okay, who are actually 5-10 years old, okay, not startups. Startups cannot buy money market instruments because they do not require capital for a short period of time. They require funding for a longer period of time because they are in the initial stage. But the business people, they require capital for a short period of time. Let's say you and I are into a business, okay. We are making a car, so car manufacturing. So if you are selling me, or if we are in a trade where you are selling me the raw material of making a car, okay, nut bolts and all that, and I am the manufacturing unit where I am manufacturing a car, okay, and I am selling it in the market. And so if I do not pay you, okay, if I do not pay you for a particular month or two, will you be able to sell me the nut bolts? Will you get the nut bolts from your wholesaler that you are getting nut bolts for us? Will you get it if you've not paid? No, right? So over here, what I will do is in order to, so we would have a credit agreement made, okay, that you please give me 1 or 2 months, I will make the repayment, okay. But if I'm extending it beyond that 2 months, what will I do now? After 2 months, I will immediately go to a money market and I would take some money market instruments and then repay you, okay, so that you can pay it to the wholesaler from where you are getting the raw material for me, correct? That is where the business will keep functioning. If you do not pay your wholesaler where you're getting your raw material, your wholesaler is not going to give you nut bolts for free, okay. And if you do not get it for free, then my business will go on hold, your business too will go on hold, even mine will stop, right? The working, no employees will work for anything. If there's no money, they won't get any other thing to work on, right? So if there's no money churning around, your business is not going to function. Here is where the money market instruments come in picture. Okay. Got it?
Okay, thank you, ma'am.
So it's not, no worries. So it's not for startups. It's basically for businessmen who require quick money, where a quick borrowing and selling is done, or quick lending is done. Okay. Now, so I have given you a gist of this. Okay, so these are the instruments that are dealt in the money market. So it's called money, certificate of deposit, treasury bills, short-term government securities, bankers acceptance, commercial bills, commercial papers, intercorporate funds. Okay. So these have basically a duration of 1 day or fortnight to a year, up to a year. It does not extend beyond a year. Okay, the duration. Now let's go to the capital markets. So basically, capital markets are long-term funding that happens. Okay. However, it also includes market for short-term funds. For instance, capital market is a market for financial instruments, short-term and long-term, also commercial, industrial, and government papers. It consists of number of individuals and canalize supply and demand for long-term capital and claims on capital. Okay. So basically, a trick to remember this, here capital market is beyond 1 year duration. So whatever instruments that you find where the duration is more than 1 year, okay, duration of more than 1 year means you need to close it. So money market instrument, let's say Om and I are into a trade, okay, and I have purchased a commercial paper, okay, and I have told him that yes, within 2 months I'll be paying you this so and so amount for the material that I require. But in case I don't pay him, he can give me a right that I can keep it till 1 year, because I have a money market instrument that will have maturity till 1 year, but beyond that you cannot use that. It's all done. So either he can file a legal case for not repaying him, or either we can stop trading and he can take away my assets that I'm holding on. Okay. But in capital market, it is a market where financial instruments are traded for a long-term purpose. So equity, debt, they are used for a long-term purpose. Debt is basically can be used for buying some furniture or for some machinery that you see. So if you see there are manufacturing units that, giving an example, Forbes Marshall or Tata Motors or any other company that you see, they buy a lot of machinery, I mean, huge lot of chunk of machinery where the employees or laborers are working there. Okay. So that machinery could be either bought by, using the debt market, which is a long-term one. Okay. Because until all the machinery does not give the output so that the company can repay all the debt, they still have the leeway of taking the machines and going off. Okay. The way if you take a home loan, is the same way for machineries or companies that people are using. Okay. Let's say you purchase a flat or a bungalow, okay, and you've not made the timely payments, and then you figure it out that there's some issue, and then there's some issue that is going on with the house building and all that. You've not made the you've not kept the money that is needed to be paid. Okay. What will happen is the bank will come up and take away the keys and the documents of that. The bank already has your documents. It will own your house and keep it for, or put it for auction on their website. Okay. So it's the same way that happens in the market. Okay. So now here, the constituents of capital market, we've got stock exchange, commercial bank, cooperative bank, savings bank, developed banks, insurance companies, investment trust or companies. So basically these are the platforms where you can use these financial products. Okay. So stock exchange is where people are trading onto the market. Okay. Where all the pricing is done, the highs and the lows. And commercial banks, now basically these, all the banks, all the insurance companies, all the investment trusts, now they have come up to to an online platform now. Okay. So that is why these are present here. So if you see now, if you go to any platform like PhonePe or GPay or any other platform that you see, there are financial products that are being promoted there. You can buy it at a lower cost and then sell it off at a higher cost. It's up to you. There are mutual funds that are being there on this online platform, and that is why these banks have been present over here. Okay. As a channel of capital market. Now let's go a little deeper. So capital market and bond market. It provides, bond market provides bond issuance and bond trading. Okay. So bond market are products where the financial instrument has a fixed duration, fixed interest, and fixed payments on time. Okay. But stock market, it provides shares of stock issuance and by share trading. Okay. Now I'll tell you what is the difference between the two. Let's say Sejal and me are into a business. Okay. And Sejal has invested in my business by taking bonds. Okay. Not stocks, not equity shares, but bonds. So, and let's say I have Sahil also. So, Sahil is taking shares from my company and I'm the investor. I'm the owner of the company. So what happens is when Sejal is buying bonds from my company, she cannot be the owner of the company. She has just invested. She is getting her fixed returns. So let's say Sejal and I have an agreement saying that you would be getting 5% fixed returns on the bonds that you're purchasing. So she's purchased around 5 or 10 bonds. Okay. She would be getting fixed returns on her bond purchase. Also, when the company is winding up or the company is going through bankruptcy, okay, bankruptcy means closing. There's a lot of losses going on. But when the company is going through losses, she has the right that she can come and demand her money. So what I will have to do is I will have to liquidate my assets, whatever I have. Liquidating my assets, meaning I can sell off my machinery and first pay her, first pay all the creditors, all the bankers, and all the bond holders. Okay. Sahil will get all the leftover after repaying everything, after repaying all the creditors that are there in the market. Sahil being the equity owner, he is the owner in the business. Okay. Why? Because he's purchased equity shares. That means he is the person who is taking risk in my business. He is the person who has taken higher risk. Okay, Sejal is not taking a higher risk here. She is fixed. So basically, bond market acts like a fixed deposit. Have you heard of fixed deposit? Everyone in our family has at least have one fixed deposit. Do you agree that? Yes, no?
Yes, ma'am.
Yes. So bond market basically acts like a fixed deposit. Everything is fixed in nature. There's no loss. Even if there's loss going on and on, you are going to get your money back. But in stock market, or stock market is also called as equity market or the owner's market, there, if the company is going through a loss, you do not get anything. You do not get anything. Now, let's say my company is progressing and it has made for this particular week, I'm not saying month, for this particular week, I have made 5 lakh rupees. I would be paying all the bankers first, then I would be paying Sejal first. After that, I would be paying I would be paying the equity owner. Let's say if from that 5 lakh rupees, I am still left with 3 lakh rupees. Okay. Then you and who was the equity owner? I think Om or Sahil, I don't know. So equity owner and me, based on the agreement, if we have agreed that 50-50 we would be sharing, he would get 1 lakh, or he would get 1.5 and I would get 1.5 lakh. The rest, so here we have made a profit. Why? Because the company has made profits. So this is the benefit of investing into equity. And the drawback of investing into equity, when the company is winding up or is into losses, you don't get anything. First, the priority is given to all the outsiders or the creditors that needs to be repaid, and then the leftover, or you can say residual income, it goes to the equity shareholders. It's gone to the equity shareholders. Okay. Any doubts here? Yes, no?
No, ma'am.
Yes.
No,
okay.
ma'am.
All right. Oh, okay. So let's go to foreign exchange market. Okay. So as we've already spoken about foreign exchange market, where the trading of currency happens. Okay. And they have their international platforms. Okay. There are regulators that are involved. Okay. Even in the capital market, there are regulators involved. Can someone tell me which is the regulator that is involved in Indian capital market?
SEBI.
Very good. Who said that? Who is that? Very good, Om. SEBI. And can anyone tell me which is the regulator that regulates in the foreign market or in the international market? Anyone? Okay, so we've got SEC. Okay, we've got SEC, Securities Exchange Commission. So we basically these regulators. Okay, so these regulators basically are the ones which regulate the market where the investor is not cheated. Okay, so let's say if there's a stock exchange and you're just putting money or you're just trading and you do not make any profit for years, that means there's something going wrong, correct? So here the regulator comes in the picture to safeguard the investors so that they keep investing money and the money is churning around the country so that the country progresses. Okay. Now let's stop here. Okay. And I would be having a quick question. So I want everyone to come on the camera quickly. I want everyone to come on the camera quickly. Yes. Nishta, are you there? Prashant? Prashant, Nishta, Om, Rutuja?
Yes, ma'am.
Yes. Okay. Can you tell me which kind of financial product you would at least try to invest into? Try.
Equity.
Equity. Okay. Why? Why?
Because it is more accessible than any other.
It is more accessible. Okay. But don't you think you will have to take a lot of risk for buying equity?
Yes, ma'am. There is a risk involved, and that
So
is
if,
like everyone's choice.
okay, so you are a risk taker basically.
Yeah, more risk, more reward.
Very good. The risk reward ratio. So you've read about it. Yes. Higher the risk, higher the reward. Yes. Does anyone know which is one of the riskiest financial market that you've heard about? Riskiest, okay, which is dangerous.
Derivatives market.
Very good. Om is prepared and come for the class, or do you know about it? What student are you? A commerce student, finance, what is it?
No, I have done science actually.
So, wow, really, really appreciate this. How many people are from commerce and finance? Can you raise your hand? Can you raise your hand? I'm glad that Om, being a science student, is answering all the questions. Yes. So derivative market is one of the riskiest market, or if you've read Warren Buffett's quotes and books, it's one of the dangerous markets. You can trade into anything, using a derivative, anything. So there is a climate weather change derivative, climate derivatives. There are lot of things that is dealt in a derivative market. Okay. So that is why it's one of the riskiest way. But also in derivative market, the regulator comes in picture when it is traded into futures and options. Okay, that is an advanced level financial product. So I won't deep dive here. Okay, so I wanted to know if you'll have a question, for today's class, or any takeaway that you would like to share, or you would like to share your experience, with regards to dealing into some kind of financial market or stock exchange or trading. So let me start with Subhadeep, as he's already trading into something, and let us understand how much profit or loss he's made today. Yes, Subhadeep.
Yes, ma'am. Actually, I am not a intraday trader, so this is my positional best. So this result
This
will
is a
come. This trade is for positional based, so not a intraday trade. So I am not getting the loss and profit right now. I will
okay.
do it after in a week. So I will keep updated.
What product are you trading into?
I generally trade in equities.
Okay, very good. Okay, so you're going to tell us your experience in further classes. Who else does trading here? Who
Oh,
else does
actually,
trading?
I got some more knowledge in the market for today's class. I get more insight from you, ma'am, and this will help keeping me to gathering my knowledge as well as my financial experience. Thank you for this. Something I knew not to from you that will be helpful. Thank you for your insight.
Thank you, Subhadeep. Thank you for participating.
Okay, ma'am. Can you leave? I am an emergency.
Yes, sure. Thank you.
Thank, thank
Thank you for being there. Yes. So, does anyone have any questions here? Does anyone have any questions? Please let me know. Otherwise, we can wind up.
No, ma'am.
Thank you all for being participative. Thank you everyone for being there and listening patiently. Sita, yes, I hand it over to you.
Yeah, thank you so much, ma'am, for today's master class. It was a wonderful topic which you have chosen, and students are also like interactive. So, is there any feedback about the class? How you like the classes or not? Like Sejal, Sahil. Drop your feedback in the Zoom chat box so that you can like conduct any other sessions.
So, just a request to everyone. So if you are using Zoom, please change your, you are directly texting here. Change it to everyone in the meeting so that the host also gets to know your feedback. Okay.
Yes, definitely.
Yes.
Sejal, informative. Thank you, Sejal, for your feedback. What
So,
about?
ma'am, today I got to learn about money markets. Previously, I didn't know about it, but from today's session, I got to know. So, yeah, it was very good.
You can do one thing. You can just like write it in the chat box. Thank you. I think good. Thank you so much for the wonderful feedback. So thank you, ma'am. Thank you so much. Thank you, others too who have joined the master class. So see you in next class when we will conduct any other sessions with ma'am. Okay. Yeah. Thank you. Thank you. Have a great day.
Thank you, everyone. Have a great day. Have a happy weekend
Thank you,
ahead.
ma'am.
Thank you. Yes.
Thank you.